Welcome back, mortgage gurus. As you know from a previous lesson, the loan process starts with that initial pre-approval and ends with closing. We've discussed a lot about pre-approval and the importance of it. So now let's move on to the other end of the process, closing. In particular, today we're going to cover two very important documents that are part of closing that you need to know about: the loan estimate and the closing disclosure. These documents are not long and they don't contain a lot of fine print. However, they break down all of the closing costs you can be expected to pay at the closing table. Up first, we have the loan estimate, also called the LE. This government-required document will be provided by the lender within 3 business days. This 3-page document essentially summarizes the initial loan terms. Now we're going to go through each page of this document and what you will see. Here you can see page 1. You will see the loan details, such as the date, the property address, and the loan amount. Below that, you'll find the loan terms section. In this section, you'll see the total loan amount, the interest rate, and then what the monthly mortgage payment will be. Then to the right of that, you'll see some yes/no questions, essentially asking if this amount can change after closing date. Under that, you'll see the projected payments section. In this section, you'll see the monthly mortgage payment along with taxes, insurance, and assessment costs. Remember, there are costs or fees that the borrower is required to pay upon closing. At the bottom of the page, there's a section called Cost at Closing. This is the borrower's initial look at what they may be expected to pay at the closing table. This will break down closing cost estimates along with cash to close estimates. Moving on to page 2, top left, you'll see loan costs. The main costs are origination charges, application fees, and underwriting fees. You will also see services you can and can't shop for. Things like the admin fee, the settlement fee, and the flood certification will be classified as either something that can or can't be shopped for. The final section on page 2 is calculating cash to close. This section provides itemized math on the money needed for closing. Now we're brought to the final page of the loan estimate. The main thing on this page are the comparisons. You will see the APR, also known as annual percentage rate, which are the costs endured by taking out a mortgage. Then you will see additional fees such as the escrow fee and mortgage insurance. These can impact the annual percentage rate. On the bottom of this page, the borrower will be guided to sign the document. If all the initial loan terms are agreed upon and understood, the borrower is good to sign. So this document is important to understand, to know the loan and the closing cost. So what exactly is this closing disclosure? Well, the closing disclosure, also known as the CD, is a 5-page document that finalizes the true loan terms. This covers a lot of the same information as that loan estimate, but it's in its final form. At this point, the loan costs are locked in, and the closing costs are disclosed officially. This document is provided by the mortgage lender and must be received and acknowledged by the buyer 3 days prior to closing. All right, the CD is important to understand, so let's go through these pages. Page 1 at the top left, you'll see that loan information again. Be tentative and check to make sure all this information is accurate. Next, the loan terms are listed again. This is now the official monthly payment amount and loan amount. If it's a typical fixed-rate mortgage, this cannot be changed later on. Following, you'll see that familiar projected payment section, or what the borrower is expected to pay monthly. And lastly, you'll see the cost at closing. How much the lender has paid on the buyer's behalf and how much the buyer is expected to pay at closing. This is final and important to know prior to closing. As you'll see, a lot of this information is similar to page 1 of that loan estimate. However, this information is final and official now. It's not an estimate. Now we're brought to page 2 of the CD. You'll see the loan costs, things that can be shopped for, things that can't be shopped for, and the other costs section. Very similar to that loan estimate. So what differs? Well, under things that can be shopped for, Section C can differ by no more than 10%. In the other cost section, Section E can also differ, but no more than 10%. The remaining sections under the other cost section can differ depending on the property. All remaining sections should replicate what you've seen on the loan estimate. Now we are brought to page 3 of the closing disclosures. At the top, you will see the similar cash to close section. Here you can see the comparison of the cash to close section on the loan estimate to the final and official value. Below you will see the summary of transactions. In this area, you can see who is paying for what and what has already been paid for. Page 4 will now provide any additional information that's required to be disclosed about this loan. Really, it's laying out any additional monthly expense payments, such as a late payment, a partial payment, or an escrow account. We have made it to the final page, page 5. First, you'll see a section titled Loan Calculations. This acts as a summary of that official and final home loan. Then you have other disclosures, mainly addressing any appraisal information or foreclosure details. At the bottom of the document, contact information of anyone in this transaction is disclosed. To make closing official, the borrower just needs to sign the bottom of the CD. There you have it, the loan estimate and closing disclosure. Closing costs are a thing to remember, and these documents are always required and frequently misunderstood. With now knowing how to interpret these documents, you can feel comfortable and confident signing and preparing for closing day.